welcome to The Explainer. Today, we are digging into one analyst's take on a truly pivotal moment for Bitcoin. The market feels coiled like a spring, and according to our source, a whole lot of people are about to seriously regret how they play this next big move.
So what this all boils down to is one single high-stakes question as Bitcoin stares down a key price level. Are we about to see a massive surge of FOMO that sends prices soaring? Or are we looking at a nasty rejection that sends us right back down to Goblin Town? According to this analyst, there really is no in-between here.
All right, so how are we going to break all this down? Well, first, we'll look at that absolutely critical $100,000 level for Bitcoin. Then, we're going to dig into the bullish signals that are pointing up. From there, we'll dive into the wild world of the meme coin frenzy. See why Solana is such a key player in this whole story. And then, we'll wrap it all up with the key takeaways.
So, let's start with the central tension that really defines this entire situation. Right now, it's basically a tug-of-war between two completely different stories about where we are in the market cycle. Okay, so on one side, you've got the 4-year cycle camp. These are traders who believe everything is tied to Bitcoin's 4-year halving events, when the new supply gets cut in half. They think the market already hit its peak way back in October and that the party's over, so their money is sitting on the sidelines. But on the other side, you have people who see a monster breakout on the horizon, and they argue that if that happens, all that cash on the sidelines is going to come flooding back in, turning what was a headwind into a massive tailwind.
And this is why that $100,000 price tag is so much more than just a random number. Our source calls it the ultimate line in the sand. Why? Well, it's where two massive long-term trend lines that traders watch like hawks, the 200-day and the 50-week moving averages, are starting to converge. When you see a crossover like that, it's often a huge decision point for the market. A break above or a rejection from this level is going to be incredibly telling for where we go next.
Okay, so with that battleground established, let's look at the actual evidence for a potential breakout. The analyst points to a bunch of signals, both from the charts and from on-chain data. That is, data pulled right from the blockchain itself, that suggests the bears might be in for a rough time.
And check this out. This number really shows you the scale of what the big players are doing. In just the fourth quarter, 3 organizations alone bought over 45,000 Bitcoin. Now, to put that into perspective, that's actually more than the 41,000 or so that were mined in that same period. So, while a lot of retail folks were getting nervous, the big money was quietly buying up everything they could.
And this quote from the analyst really captures the mood he's talking about. His whole point is that the feeling in the market at $89,000 was just as pessimistic, just as fearful as it was at the absolute bottom of 17,000. That suggests the sell-off was driven way more by emotion than by fundamentals.
Now, for all you chart watchers out there, this is where it gets really interesting. First, Bitcoin has smashed through a key downtrend line. It's also holding strong above the 20-day exponential moving average, which is a great sign for short-term strength. And finally, some of those key momentum gauges, like the MACD and RSI, are pointing up from being massively oversold, and they suggest there is still plenty of room to run before things get overheated.
All right, let's switch gears and talk about a part of the market that might seem kind of chaotic, but our source sees it as a really valuable indicator. I'm talking about meme coins. Yeah, a lot of people dismiss them, but how they're performing can tell us a ton about the market's appetite for risk.
I mean, to really get a sense of this explosive energy, all you have to do is look at Pepecoin. This thing jumped 80% in just 4 days. A move like that is a screaming signal that speculative money is back in the game and is actively hunting for those high-risk, high-reward plays.
And that leads the analyst to ask this really challenging question. Look, his argument isn't about whether these coins are good investments. It's about recognizing what their price action represents. A crystal clear signal that the market's mood is shifting from fear back toward greed.
And this isn't just a one-off thing. He points to moves in Dogecoin and even a trade he personally took on something called Fartcoin, of all things, as part of this bigger trend. Money is flowing back into the riskiest corners of crypto, and that often happens right before the broader market takes off.
So, moving beyond Bitcoin and the meme coins, our source zeroes in on one specific ecosystem he thinks is absolutely poised to outperform. He makes a really strong case that if this bull market really does get going again, Solana could be one of the biggest winners.
And here's a really powerful piece of data to back that up. Look at this. It's all about real-world usage. Back in December, for every $100 in application revenue that was generated across all crypto chains, a stunning 38 of those dollars were generated on Solana. That shows just a massive fundamental demand for its network.
So the crucial point here is the idea of leverage. The analyst's whole thesis is that a big move for Bitcoin, let's say it doubles to $200,000, will be awesome, right? But in that exact same scenario, a leading alternative chain like Solana could see a much, much larger percentage gain, potentially rocketing from its current price all the way up into that $500 or $600 range.
Okay, we have covered a lot of ground, so let's boil this all down and summarize what our source says are the most important things to take away from all this, the critical signals everyone should be watching right now.
So here are the 3 big ideas. First, everything, and I mean everything hinges on that $100,000 level for Bitcoin. Second, pay very close attention to what the big money is doing. Remember, they were buying when everyone else was selling. And third, use that meme coin craziness as a real-time barometer for the market's risk appetite. And ultimately, that leaves us with this one giant question. For years, crypto markets were guided by these predictable 4-year cycles. But now, with huge institutions buying in, with ETFs changing how capital flows, you have to ask, do the old rules even apply anymore? The answer to that could define the next era of crypto.